This week, the market didn't just recover, it came back swinging. The Dow was up 1.35%, the S&P up 2.43%, Nasdaq up 3.87%, Russell 2000 up 2.38%. The dollar lost 0.9%, gold popped 2.7%, hitting a record before easing when the White House clarified gold tariff policy. Bitcoin futures gained 2.9%, oil slid 5.1% after OPEC Plus announced 8 members will fully unwind voluntary output cuts in September. Momentum this week was fueled by dip buying after last week's payroll-driven pullback. Dovish Fed talk pushing September rate cut odd north of 90%. Optimism around Chris Waller as a frontrunner for Fed chair, and clarity on chip tariff carve-outs. Oil prices backing off, strong earnings beats, buyback announcements, and the AI growth story, keeping tech demand hot. Despite all that, there are still some warning lights flashing. Stagflation chatter is getting louder after softer services data and hotter inflation survey readings. The New York Fed's latest numbers show short and long-term inflation expectations creeping up. Treasury auctions have been weak 3 times in a row, adding to supply concerns. Tariff effects are set to ramp up in the back half of the year, especially for companies with tight margins. And a few retail names are signaling the consumer might be losing steam. On earnings, with about 90% of the S&P reported, blended growth is running at 11.7%, well ahead of the positive 4.9% expected at the start of the quarter. But the market's rewarding beats less than usual and coming down a lot harder on misses. I am trimming small caps, energy, and communication services. They're just too exposed to tariffs, margin pressure, or stretched valuation. I'm adding to financials, tech, and utilities for their stronger balance sheet, pricing power, and resilience if growth cools without falling apart. I'm taking profits in energy, commodities, and adding industrial metals, benefiting from tight supply. Infrastructure build-out and possible China stimulus. I'm also leaning into intermediate-term taxable fixed income to lock into some solid yields without overreaching on duration while the Fed lines up potential rate cuts. Looking at next week, earnings slow down, but the data calendar heats up. Tuesday's CPI is the big one, with the core expected to tick up to 0.3% month over month and 3% year over year. Thursday brings PPI, and Friday rounds out with retail sales and Michigan consumer sentiment. Stay disciplined, stay focused, stay profitable. I will see you in the morning for the pre-market workout report. God bless.